we're now down 1%, Art, on the S&P, and back to 4,100, which is basically where it was when you were on with us last, and you said chop was on the way. What do you think is the most important thing to watch this morning?
Well, I think the market's going to continue what it's doing right now, which is taking its own pulse and its own temperature. Basically, what I'm suggesting is that we're currently testing yesterday's lows, and the market wants to know if it healed up after yesterday or whether we're going to break again. So I would watch the area in 4,100, as you say, and the S&P, the Dow, about 34,000, and probably in NASDAQ, I'd look at about 13,100. So you want to watch the market. If we violate those levels, do we wind up with a kind of trapdoor selling? Don't forget we have all these algorithms trading now. It's not just two-legged people anymore. And so that'll be a critical point. And another factor is the yield on the 10-year. If we get to 1.7, that may be a bit of an electric shock that translates. We get a auction at 1 o'clock of the 10 years, so Rick Santelli will be digging into it, I'm sure, for you. We'll be watching to see if foreigners are buying or how well that auction goes. That's going to be critical.
Yeah. I know you've been paying close attention to the VIX for several weeks. We had this 40% surge over a couple of days, this 4 Sigma event, as Tom Lee puts it. And Tom argues that if you look historically with surges in the VIX like that over such a compressed period of time, forward returns are actually pretty encouraging. What do you make of it?
Oh, well, an absolute surge in the VIX is often a sign of at least a temporary bottom. But I think next time you have Tom on, what you need to discuss with him was we had some divergence in the VIX. When the market was looking reasonably well, the current VIX dropped down pretty smartly, while the futures discount of the VIX a couple of months out didn't do that. And that divergence is what gets we old fogies' attention. And I think for now, all I can say is it looks like we've corrected that divergence by shooting back up. I'm not sure I'm ready to call a bottom on 2 days' worth of trading, particularly with the kind of moves we've had. So I think call my game. I'll keep watching those levels of yesterday's losses. If we violate them, do we get trapdoor selling? Or are we going to learn that the market's kind of happy with these levels and maybe the bulls can get control again?
Shepard Smith here. Thanks for watching CNBC on YouTube.